Wayne, are you wavering as we have this conversation today?
No, I was fortunate enough to have pared back my shares early, at the midpoint of last year. So, and because because my portfolio is primarily about 85% cash, I really don't have as much stock in Apple as I could have had, which is something I'm quite thankful for right now.
Yeah, I'm sure you are. I'm surprised you don't have a bigger smile on your face today. Tom, buy rating, 260. Is this still right?
The answer is yes. So if you look at Apple's shares following today's pullback, they're trading at a 10% free cash flow yield, which historically has represented tremendous value. Working in favor for the stock is that the company ended the December quarter with about $130 billion in cash. They have a $100 billion repurchase program in place, which we should get an update in April, May this year for the next repurchase program. So today was definitely a dark day, but I still see value in the shares of Apple.
Were you blindsided by the announcement that we got?
The notion that there was weakness in iPhones was not a surprise. So intra-quarter, we had lowered our sales forecast to the bottom of guidance. The fact, though, that they reported that the sales are going to be 5.5% weaker than even the low end, that was a surprise. And it is highly unusual and surprising to see Apple pre-announce weaker than expected results.
Wayne, has any of this caused you to, I guess, sort of reassess sort of the reasons you own Apple or things that you would like Apple to do from here strategically? I don't know if that would mean, emphasizing dividends more than buybacks, making some kind of an acquisition, or do you think the story remains intact?
I think the story remains intact, and folks should just realize that the market has practically gift-wrapped itself for buyers who have sat on the sidelines for years. I mean, you've got the major indices deep in the red, and you've got Apple in the red, and it's a perfect environment to start buying in, possibly buying in way more than you could have if you started the process about a year ago. So I'm standing firm, and I believe brighter days are ahead.
Tom, the fact that the iPhone was softer, I mean, it's not a surprise. I agree with you on that. But the magnitude by which it fell off a cliff in revenue from China has shocked even the folks who have done the most work on this thing. It seems like you're being dismissive of the dramatic decline. I mean, I don't know how you could have a $260 price target on a stock that just is holding on to $140. This thing's going to nearly double in 12 months? Really?
So if you look at the cash flow that Apple generates, while understanding that the results are disappointing, it still generates very significant cash flow. And if you look at as far as where do we go from here, I am of the belief that the company can make adjustments on their go-to-market strategy to try to stimulate the upgrade cycle, and you could see better than expected.
What does that mean? Are you talking about cutting prices on the iPhone? What's the go-to-market strategy? Is that what you're talking about?
Sure. So you're talking about extending financing to consumers, perhaps being a little more generous on the value of the phone they're turning in for the upgrade, things of that nature. There's a lot of levers Apple can pull to try to improve the performance of their iPhone. China's a little bit of a more difficult situation. At the expense of margin, but Apple's got margin to burn. I mean, the reason that Apple's been able to succeed and has been such a successful stock for so long is their ability to extract the highest margin out of the most expensive part of the categories that they exploit.